Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. Not a whole lot of action this week. I'll tell you, the most action we're getting all week is the fact that we have Jeff in-house here. A new name in the mix, and we're going to mix it up and have some fun. And Jeff goes way, way back with McIlvaney Precious Metals. So we're honored to have you here today, buddy, and looking for all the wisdom you have to offer.
That could be a short show.
That's okay.
But Tori, thanks for letting me jump in and jump on. I came all the way from Coeur d'Alene just to fill a seat here on Golden Rule Radio.
There you go. Well, Miles is out this week, but he will be working on some of the imagery, Rob as well, and so we wish them well. But all that being said, let's recap the week. As we record on Wednesday, the 11th of December, gold is currently at $2,718. That's up 1.3% from a week ago. $31.94 currently in silver. We did just drop below 32, which we were above all day. But that being said, we're still up 2% on the week in silver, and it has narrowed the ratio a little bit. Platinum flat, last week 947, or today 947, last week 943. So not a whole lot to talk about there. But palladium, a little bit of a pop. It's the winner for the week, 2.7% gain from 982 to 1,009 today. So again, relatively quiet week, but are you encouraged, Jeff? I mean, is there a trend here that you feel could be a little bit long in the legs?
I'm completely encouraged by particularly gold's price action. You know, we expected to see some pullback after the election. We got some. I think we would have thought it would be more.
Yes, I did.
And with rate cuts out there, with the Trump jump in response to his win, and in particularly all of the momentum in the crypto market right now, you would have thought that gold would fall, would pull back. And it's held right in there. And honestly, kind of been a sneaky climber the last couple of weeks.
It has, and it's coincided. It's interesting you bring up like Bitcoin. The last I saw, I think 103,000 or something. I don't know if it ended up going higher than that. Sorry, it's not something I follow all that closely, but it has dropped, and that has corresponded with gold's climb. So they've actually proven over some time to have a little bit of an inverse relationship like the U.S. dollar. So the U.S. dollar, with this gold floor and now subsequent climb, the U.S. dollar has turned down from that 108 top to now below the 106. So a lot of inverse relationships there. We are going to have a show that goes into some of the underlying fundamentals. Not only why do you buy gold, but why does gold move in its price compared to some things like those underlying fundamentals?
That's going to be a great show. And I think the timeliness of that topic with you and Rob talking about it absolutely is going to make a lot of sense. Everybody's going to need to kind of set that one aside and use it as a reminder as we go into next year.
Yeah, good point. I mean, just if we can back away, right now we're focused on the trees, and every once in a while you need to get away and look at the whole forest because, yeah, a lot of us have been waiting for a pullback. I've got clients with money on the sidelines waiting for an additional dip. Now, we've kind of beat this up here in the last few months, but the first time Trump won in 2016, the market corrected by that last week of December all the way about 13.5%. I think peak to trough, we saw about a 9.5% pullback. Not all of that post-election. Some of it happened in the 1 or 2 days for the insiders like you that knew it was going to happen and sold and shorted the gold market, but I wasn't one of those. But yeah, it's less of a pullback than it was in 2016, and now reality starts to set in. And it doesn't mean that you couldn't ultimately see a further retracement, but seasonally, I mean, are you surprised just the December?
I think there's a number of things, Tori, that are positives for gold in the sense that if you look at on paper, we should probably be seeing that pullback in the metals. Strong pullback, whether it's just scraping some profits off the top, you know, the momentum in certain areas that way. And yet we see it just continue to hang in there. You know, it's not running necessarily, but it's steady. And it's showing that strength and that stability in light of what we see going around us. There's another rate cut coming that's looming there. We've got, again, that Trump bump with him winning. But when I look at the gold price hanging in there where it is, I think what it reflects is, for instance, even the other day when we were in meeting, Morgan was talking about the fact that the number of executives and CEOs that are looking at our current market run, whether it's the S&P or the Dow running, You'd think, again, there's money moving that direction, except that you got CEOs dumping their company stock.
Yes, insider selling. He was saying, well, it was November was the best month of the year with 90% selling and 10% buying.
Right. That was the best over the last year.
Over the last year. And December is like 99% so far this month, 99% selling, 1% buying. So if November was the best at 90, all the other months were like what, between 93 and 97, I think.
Yes, that's correct.
So what kind of testimony is that? And to which David McIlvaney add that to 1,800 CEO retirements
Yes.
this year, and somebody knows something.
That's
People
right.
a lot smarter than we are know when to kind of take the money and run.
Yeah, absolutely. So now you're mixing that in the pot, and you touched on seasonality a minute ago. We're going to now move into some seasonal positives. You're going to move into Indian wedding season. You're going to move into Chinese New Year, and that's time where you see investment dollars come in to give those kind of gifts. Central bank buying is continuing that way. And ultimately, when we look at the gold price, and as I'm talking with clients, the question is, have we maybe hit a top at 27 and change? The answer to that is, I think there's a lot of room yet because of the fact that we still haven't seen the Western investor come into the market.
That's right.
And I think what we're maybe seeing, and I could be wrong, but what I think we're maybe seeing is we can have some people going, I'm waiting for a pullback, I'm waiting for a certain price. But if something was to switch, maybe we get a pullback in the markets, maybe we see something go on geopolitically that will finally cause a pain point for the Western investor, those entry points that they're not going to be there anymore.
That's right.
Because once we see Western dollars come in to the precious metals market, the gold and silver market, we're moving in steps that honestly will keep sideline people on the sideline.
I think the case in point, Bitcoin, we already talked about it. You know, that move to
That's a good
103 started at 70, and it was less than a month.
Yep.
Now that's what happens in that manic phase of that melt up in the last stage of a bull market. And I'm not saying Bitcoin has necessarily run its course. Again, I'm not an expert in that. However, I can tell you that throughout bull market history, that's an indication of a late stage rally that's this melt up type of a deal. And maybe that has yet to come in gold. In fact, I know it has yet to come in gold because the Western investor's not there. We realize it from the physical market. Premiums are still very low because the physical demand has not been all that strong in the Western markets, despite the spot price climbing.
That's right.
And yet, from a technical standpoint, you know, Miles would argue, well, yeah, there's going to be some resistance to the upside. And I think that 2007-29-ish, 2007-30 is going to be a point of resistance. And above that, then there's just this gap up to the previous high. And now you're in uncharted waters where once we cross that 2791, you know, you'll get that round number resistance, as Miles likes to call it, at 2800. And then what? You know, we don't know. And what's driving it? We don't know. Is it the geopolitical stuff? Is it the U.S. dollar aggressive downturn? Is it an equities market correction? We're in an everything bubble, are we not? And I saw just a great point on X. 1, stocks at an all-time high. 2, Bitcoin at an all-time high. 3, housing at an all-time high. 4, the national debt at an all-time high. You've got credit card and consumer debt at an all-time high. CPI or core inflation, 42 straight months at over 3%. Longest rally since the early 90s. And point number 6 or 7, whatever I'm on, is the fact that, oh yeah, there's probably a rate cut coming. Now, justify that. We've got all these things at an all-time high, and you talk about why gold has a floor. If they cut rates, that's weak dollar policy. Dollar should turn down further. It's irresponsible, and it's nefarious to me. It's wrong because you already have the everything bubble. We don't need cheaper borrowing. We don't need more lending. We don't need the velocity of money to ramp up too aggressively.
No, we don't need any of that help.
No.
And I think what it does is, in Tori, you probably have some of these conversations with your clients too. It really puts a premium for our clients to not so much get caught up in trying to figure out the timing of a pullback in the Dow, or how high can Bitcoin go, or this or that, as much as it is to understand our why, or the mandate behind how we allocate our investment dollars. And in that allocation, to understand, why do I want to have a foundation under my feet in precious metals? And as you're establishing that, then you start to strategically add over time. And maybe it's on a pullback, maybe it's not, maybe it's just because you got to the next quarter and you did a review of what you have and you're over allocated now because your stocks are up or your Bitcoin's up and it's time to reallocate again. But I think to have the mandate or our why in place as to why we have that gold and silver in our portfolio matters.
I totally agree. And it may be that you're just sticking to a plan, right? Like your monthly acquisition is what I'd recommend. You don't care what the price does when you stick to a plan. And I tell clients, look, establish a number of ounces that you want to have come retirement or come some phase of life where you just need the guaranteed income, and work your way towards that. And the why on the white metals for me is to get me there faster, right? So through the ratio trading, for example, silver, let's talk about silver here a little bit, because the ratio got up to 87 again. Silver had a little bit of a pop. We finally clawed our way back to 32. We're having a hard time staying over 32. But remember, in this recent high here, just going back a couple months, we were at 35. And can we get there again? What do you see in silver in terms of keeping pace? Because now the ratio is 84. But Jeff, I mean, we're flat on the year. We started the year around 86 on the ratio, and here we are ending at 84 despite the volatility. What do you see in 2025 silver-wise while we have you?
When I look at silver and I look at the ratio, you touched on the fact that 90 has been a ceiling for us. I mean, it's almost like you can set your watch to, if you hit 90, we're pulling back.
And silver's going to rally.
And silver's going to rally. But if it dips its toe under 80, it doesn't like that either.
Great point.
And it wants to go the other way. You know, as I look down the road into 2025 and beyond, I don't know if I can really say confidently, hey, we're going to 40 or we're going to 50. But what I think I see happening, or what I could see play out, is, let's say we go to $3,000 gold, $3,250 on gold. At some point in time, the average investor gets priced out of gold. I don't know when that is. I don't know how it plays out. But looking at $3,250 for an ounce of gold, or you're looking at it and are going, I can pay $35 an ounce for silver, the average investor gets hooked into the silver side of it and says, I'm going that way. And I think that kind of comes with the advent of the Western investor coming. And as that happens, and I think you see that ratio constrict. But I think that's kind of a trigger, at least from where I'm sitting.
No, I totally agree. I mean, it's about the ratio is what I hear you saying. Rather than us trying to predict where the price goes, who cares? Because, again, the white metals represent more gold to me. It's discounted gold. So, yes, you may get priced out of gold, or you may just look at where it is and say, well, it's a little unattractive to me. And if I get a ratio trade down the road, if I buy silver right now, I'm saving 20 to 30% on my gold. So now I'm buying it at, $2,200 to $2,400 the gold.
We both have a friend that has rightly described silver as a tool.
Yes.
That we see it in our portfolio almost completely pragmatically, to say we love silver to the extent that it buys us more gold.
That's right.
And I think that we have to come with that mentality with the silver, is that it's a means to an end for us.
Yep.
And that hand in hand with your point of, how many ounces do I want? How many ounces of gold do I want at retirement? How many ounces do I want at whatever age? Silver helps me get there.
That's right. And maybe platinum will, right? So now platinum flat on the week. Man, it's been flat on the year. Actually, it's down 6% this year. So platinum and palladium, platinum's down 6% this year. Palladium is down 11.5% this year. It's the big loser, despite silver being up 33% with where we are right now. Gold about 24%. Those are anomalous years. We're not expecting that again in 2025, but could be. Nothing's changed fundamentally. Right. But saying that, platinum, again, it's a tool for me. Might be a minority position, but if it takes 3 ounces of platinum right now to equal an ounce of gold, I look forward to the day where my 3 ounces of platinum trade straight across for 3 ounces of gold.
That's gonna be a
Right.
good
All
day.
they need to do is get to parity with each other. And we saw that for years and years and years, where platinum was equal to or higher in value than an ounce of gold. And now part of that is because gold's money metal role and geopolitical role and all these other things that we'll get into next week have caused it to climb pretty steadily, and platinum's just been sticking in the 900s. But there will be a day that they're back to parity, and we'll move platinum into gold, and that will have been your gold discount at that time. So if you feel like you're getting priced out, to Jeff's point, look at the white metals as a strategic play now, and every month that you have the opportunity to see these ratios
Yep.
and look at it. But I would never avoid gold. It's the big dog. It's a steady Eddie.
It is, and everybody needs gold. Everybody needs to have some gold. You know, I look at platinum and follow it over this year particularly, Tori. It kind of has that feel of what gold did back years ago, right? Where you'd come in and you look at the gold price and it never did anything. It didn't move. It was $10 higher, $10 lower. And then next thing you know, it was off to the races. And while platinum doesn't have the monetary quality that gold does, you come in and you look at platinum and it's $10 higher, it's $10 lower. But someday we're going to wake up, it's going to be 1,500, 1,800, and that ratio is going to have constricted and you're going to pick up some ounces for sure. I would say, just to throw out there, since you were nice enough to let me come on the show today, is the fact that when I am talking with clients right now and maybe are new to our industry and they're saying, when do I get in? The answer is today.
Yes.
If you don't have a precious metals position, today is the day to take your initial position, because everybody wants to be able to cost average. And the truth behind that, when we start talking cost averaging, what we're saying is I want to buy ounces cheaper, and particularly so that when I'm at the barbecue this summer, I can tell all my buddies that I got it cheaper than they did.
And I was a wise investor.
That's it.
I didn't chase.
I didn't chase high prices.
Yeah, that's right. I didn't try to catch the wave.
And so then they wait and they wait and they wait. And before you can start to cost average and be strategic, you got to have a baseline.
That's wise advice, my
Yeah.
friend. And I've seen a lot of people never take that initial position because they just felt like they missed it. And all we have to do is go back 50 years of our company history. And when gold doubled from $35 to $70, think about the number of people that thought they missed it. When it doubled again to $150, think about the number of people that never did it because they thought they missed it. So in our lifetime, it's like death and taxes. Inflation is just a guarantee. And as long as inflation is a guarantee, then the nominal value increase in the gold price, to me, is a guarantee. And that's what makes it such a great cash and savings alternative. And meanwhile, lots of things can move the price. Again, we'll get into that next week. Next week we have some price action coming as a result of the Federal Reserve. And we'll see what happens with the rate cuts. As they tend to cut rates, that causes a little bit of a dollar drop and a gold rally. I don't know what they'll do. The next administration's inheriting a mess. And anybody that thinks that everything's just rosy, there's going to be a recession declared
Yes.
in 2025.
Yes.
Right? There's going to be infighting in government halls.
Yes.
There's going to be bureaucrats going against elected officials, and there are going to be judges going against, an executive branch, and there are going to be real numbers coming out that have been baked in. There's going to be a lot of blame being thrown. It'll be interesting to see what happens on a geopolitical standpoint, but also from a Federal Reserve. Is it healthy to be cutting rates in an everything bubble? No. But in Trump's first presidency, he had the Federal Reserve against him. I know it's not political, but they were raising rates and they were quantitative tightening. They were shrinking their balance sheet, much to his chagrin. And it's set up for a repeat, in my opinion, in 2025 and 2026. And he's got his hands full.
I would agree with you on that. I think the Federal Reserve versus White House battle will be the main event. I think it will be bigger than we think. And to your point, weak dollar policy's coming. That was his policy, his first term. It will be, and he'll double down on it in some ways.
To stimulate.
Absolutely, 100%.
And he's walking an incredible tightrope, one that I don't want to be walking, because stimulation of the economy versus stimulation of inflation, now that's a tightrope that nobody wants to be walking. How do you stimulate Does it drive inflation higher? Does it make life more unaffordable for the sake of GDP numbers and tax revenues and political podium speeches? And you've got to be very, very careful. And you've got an issue where the whole market is pricing in inflation for 2025 right now, as if it's going to climb. University of Michigan sentiment is that in 12 months, we're going to be back up over 5, almost 5.5% on the inflation rate. So do we have inflation or do we have disinflation, which is just a slowing of inflation? It's not a cheapening of prices. That's deflation, right? We all want deflation, but guess what, Jeff? That comes with really tough times. When there's deflation, we're talking about deep recessions or even depressions.
Yep.
And that can be really good and it can drive prices down. But nobody wants that, and that's the hard fix. So how hard are they going to try to fix?
Yep.
We shall see.
That's right.
Well, that's going to do it for this week's Golden Rule Radio. If you liked what you heard, ring that bell, hit the subscribe button. You can follow us on X at ICA Gold, on Facebook at McIlvaney Financial. But better yet, we always like a call and time with you one-on-one to discuss your individual portfolio. And that is 1-800-525-9556. Thanks again to Jeff, and thank you for listening.